All right. Assalamualaikum and good afternoon, everyone. So for today, we're going to continue with topic number 3, okay, which is the cash flow and financial planning. So under this topic, okay, cash flow and financial planning, we have 3 subtopics, meaning we have 3 statements, I can say, 3 statements that we need to prepare under this topic number 3, whereby we have the first one is cash flow, okay, cash flow statements. Then we have the cash budget, right? And the third one would be the pro forma statements, right? So basically, based on the topic itself, okay, it's split into 2 things, okay? The first part is the cash flow, which is this part. And similar like financial ratios, okay, cash flow usually depends on historical data, okay, historical data. And we just report something that happened already, okay, something that happened in the past, okay. And for cash flow, it's quite similar like the income statement and the balance sheet. It will be the financial year end will be the same as the source, which is the income statement and also the balance sheets, okay. But for 3.2 and 3.3, these 2 parts would be under the financial planning part, okay. So these 2 will be based on future, okay. So meaning the document, the information is still from the past, but we are preparing something for the future, or forecasted. Okay, forecasted, or hence the name planning, plan. Right. So these 2 statements, or these 2 documents, the cash budget and pro forma statements, are basically statements that we prepare based on historical data, but for future use. Okay, future use. And we will discuss in details later on, what would be the purpose and also the importance of these 2 statements, which is under the financial plan. But for a start, we will obviously start with 3.1, which is the cash flow statements. Okay, so cash flow statement, okay, summarizes the inflows and outflows. So we're going to look at the inflows and outflows specifically for the cash transactions. Okay, for the cash transactions. So meaning under the cash flow statements, we are focusing on the cash movement. Okay, cash movements inside and outside, meaning inflows and outflows of the transactions. So therefore, when we want to summarize the inflows and outflows, what we're going to do later is to compare. Okay, to compare 2 years statement. Okay, 2 year statement, and to see how the changes from this year to the next year's statements from the cash point of view. Okay, from the cash point of view. And the purpose of this cash flow statement is to reconcile. Okay, to reconcile all cash transactions. Okay, just to take into account every cash movements of that particular company. We want to make sure everything will be recorded under the cash flow statements. Okay, and this cash, how to get the cash transactions? Usually, we will check the changes, okay, from the balance sheet items. Okay, if you remember, even from the second topic we discussed already, items on the balance sheet, we have the assets, liabilities, and also equity. Okay, so we are going to explore or look deeper into the balance sheet items, namely assets, liabilities, and also equity. And at the end of our statements, right, the cash values, okay, cash values in the cash flow statement must be equal with the cash in balance sheet. So it must tally. Okay, the value must tally between these 2 items, which is the end of our cash flow statements and the cash in the balance sheet. Okay, if you remember the balance sheets under current assets, our very first item would be cash. Okay, so that value of cash in the balance sheet must be the same as our cash when we do our cash flow statements. Okay, if not tally, meaning something wrong with our records. Okay, so we need to check back. So this will be the format, the format of cash flow statement. So the cash flow statement separated into three main categories. So the first one is the operating activity. So these activities comes in terms of the operations, okay, the operations of the business or the firm. Okay, so these are the items. So somehow you have to remember under the operating activities, there are some items that which is fixed. Okay, which is fixed will be when we plug information, because remember when we do cash flow statements, the sources, the information still based on the balance sheet income statement as well. So therefore, some items are considered fixed. Okay, for example, under operating, the first item must be the net income. Okay, net income we get from where? This is from income statement. From income statement, we have net income. Right. And then we have depreciation. So this is the second item. After net income, we will add with depreciation. Right. And depreciation depends on situation. We can get this from income statement as well. Right. Or if we don't have this information in income statement, to get the depreciation, can find it in the balance sheets. But we need to compare 2 years balance sheet to get the depreciation for the year. Okay, later on I will share with you how to get the depreciation value. And the majority of items under the operating activities will be coming from the changes in current assets and also current liabilities, which is the working capital. So if you remember the current assets, we have multiple items. Similarly, current liabilities also we have multiple items. However, under these two categories, there are few items will be excluded from operating activities. Okay, for example, if you can recall, I can write it here for current assets. We have cash, we have inventories, we have marketable securities, okay, and we have, let's say, prepaid expenses. So these are under current assets. For current liabilities, we have notes payable, we have accrued expenses. What else? And let's say other current liabilities, for example. So technically, every items will under the current asset and current liabilities will be part of operating activities, which is in the form of the changes. Okay, the changes between the 2 years, we will park under operating activities. However, we have some exclusion. So what are the exclusions? Number one, cash. So this cash from current assets will not be part of operating activities. Okay, we will exclude altogether. Okay, so meaning, if you remember earlier, I said cash in cash flow statement must equal to cash in balance sheet. So this cash in cash flow statement will be at the very bottom, the end result of our cash flow statement. So it will not be part of operating. Okay, so cash will not be in the operating activities. Right. Second items will be excluded under the operating activities will be the short-term investment. So short-term investment also usually known as marketable securities. Okay, marketable securities. Okay, so these marketable securities will not be part of operating activities. So where can you find this? This is this one. Still under current assets, yeah. But we will not record it under operating activities. This, however, will be recorded in the financing activity. Okay, this will be in the financing activity. The third category. Okay, this will be in the third category. Okay, meaning we don't exclude. Okay, we just put it in a different category. And the third items that will be excluded from our operating activities will be the notes payable. Okay, so this also will be under the financing activities, the third category. Okay, so meaning one from current assets, which is marketable securities, and one under current liabilities, which is notes payable. So these two will be part of financing activities. Okay, here it will be here notes payable, and it will be here short-term investment. Right. So in a nutshell, under our balance sheet, current assets, everything except cash, number one, because it will not be part of any activities, cash, and also short-term investment, which will be part of financing. And for current liabilities, everything except notes payable. Okay, and notes payable will be part of financial activities. Okay, so that's the current asset, current liabilities. Right. For the second category, which is investment activity, this would be based on changes in fixed assets. So remember, after current assets on top, we have fixed asset at the bottom. Right. So fixed assets will be part of second category, which is investment or investing activities. Okay, so for fixed assets, or usually here we will label them as net capital expenditure. Okay, so net capital expenditure is basically the changes of fixed assets. All right. Okay, by the way, when I said changes later, I will share with you what does it mean by changes. So basically, we will compare 2 years of statements. So when I said changes, meaning the difference between year one and year zero, for example. So what we need to do basically just minus current year with the previous year to get the changes, whether increase or decrease. Okay, but later on I will share with you the steps. Okay, so after current assets, fixed asset will be part of net capital expenditure. So that's asset side, finish. Current assets, fixed assets. So current assets, operating, fixed assets, investing. And then move to the right hand side, we have current liabilities on top. So current liabilities again will be operating. Below the current liabilities, we have long-term liabilities. So long-term liabilities will be part of financing. Okay, this one, long-term debt, will be part of financing activities. Right? And on top of that, long-term liabilities, we have equities. Okay, equity will be part of financing as well. Okay. Okay. And one final information that we need under the financing activity will be the dividend payment. Okay, and this dividend payment, we can get this information again from income statement. So to conclude, the whole statements, majority of the information, okay, from operating, investing, and financing comes from the balance sheets, except those I label IS, income statement. So we have 3 items on the income statement, which is the net income itself, right? Or it can be the loss. Kalau the company loss, it means it's net loss. Okay, and depreciation, and also dividend payments. Okay, all of this can be gathered from the income statement. Okay, the rest comes from the balance sheets. Okay, current assets. Remember, current asset, fixed asset, current liabilities, long-term liabilities, and also equity. Okay, so we need to split it according to the categories, the 3 main categories. So it will look something like this. Your statement will look something like this. Starts with the name of the company on top. And then we put the statement of cash flow for the year, 2020, 2021. Then we have 3 categories, 1, 2, and also 3. Okay. So we always start with a net income. Okay, we start with net income. And we add with, okay, the most important part here is to plus, plus the depreciation amount. And then after these 2, we will list, okay, according to the question, because we will follow through current asset first with the exceptions, and then current liabilities at the bottom. Okay, again with the exception. So again, the exception will be 3 items: cash, notes payable, and short-term investment or marketable securities. Okay, so these 3 items will be excluded from our changes in current asset, current liabilities. Okay. And if depreciation we add, right, we plus, but for the changes of current asset and current liabilities, it will be based on the sign, whether to add or to minus, depending on the sign. Okay, I'll show you afterwards how to determine the sign, whether to add or to minus. Okay, so we will add everything here, okay, plus minus here, and we'll get the value of operating activities. That's the first part. Next, second category, we only have one item, which is the changes on the fixed assets. Okay, changes on the fixed assets, just one item. So I'm going to get one item here. And the final category, which is the financing, remember, those excluded here, except cash. Cash will not be part of financing, but notes payable and short-term investment, yes. So together with the changes in long-term debt and changes in equity as well, stocks and this is from equity, this is from long-term liabilities, and the two items we exclude earlier. And don't forget the last item, the dividend. Okay, the same process, we will add and minus according to the sign, and we will try to find the financing activity. So once we have three categories, we sum everything, and the answer of after we sum everything, okay, this value on top here must equivalent to the changes, and your ending year must be balanced with the question. Okay, I'll show you afterwards in terms of the summary. Summary ini, in order to get the summary, basically before we start calculation, we can put these three items because this is all from the question, from the original document. But to get these changes must be, all the information must be tally. Okay, maybe if not clear yet, don't worry. I'll show you what does it mean by the items or the value must tally. Okay, so here on the right hand side, the instruction, we will transfer items from the balance sheet, and also some items will be from the income statement, right? Like I said, net income, depreciation, and dividend come from income statements, all right? And we will transfer according to these categories. However, okay, how to label them? Okay, they state here, similar to determine the sources and uses. Okay, so this is the one that we haven't do yet, or we haven't do at all actually, the statement and uses of funds. Okay, so what does it mean by sources and uses? So sources and uses is a process of determining based on changes, okay, based on changes, and we label, okay, we label the changes either to sources or uses, okay, to sources and uses. In short, I will put later on in terms of label S or U, okay, sources and uses. So for balance sheets, all sources, our action will be plus. We will plus all the items, okay, for sources. Whereas for users, we will minus. Okay, we will minus the items. Okay. This is the question, but before we try to do the question, okay, one more information, which is actually crucial. This is, it's not part of the notes here, but this is very important to label the sources and users. Where should I put it? Okay, maybe I put it here. We have sources and we have users here. So what are the items under sources? Okay, number one, net income. Okay, net income, you will label them as sources or S. Right. Number two, depreciation. Okay, depreciation always will be sources. All right. Next one. Okay, this is very important. Reduce. Okay, reduce in current assets. Okay, reduce in current assets will be uses. Okay, when I said reduce in, meaning current year versus the previous year, there's a reduction of current assets. Then we will label them as sources. Okay, if I can find it here, tak ada example tu. Never mind. Next, the reduction in terms of fixed asset. Okay, will be part of sources as well. Okay. And increase in liabilities. Okay, in fact, as sebenarnya tadi you can combine je ni assets, current and fixed ni basically you can combine. So meaning any reduction in assets will be sources. Any increment in liability and also equity also will be considered as sources. Okay. Again, we will use this template in order to define later on what does it mean by sources and uses tadi. Okay, but these are the items or the changes that will reflect into the sources categories. For users, okay, net loss will be part of users. Dividend will be part of users. And the opposite of this, opposite meaning increase in assets will be users. Increase in assets. Increase in assets will be part of users, and decrease in liability and equity will be users as well. Okay, so let's try this together. Okay, so for the cash flow statement question, they will give you, like I said, 2 years of documents. Okay, 2 years of documents. In this case, we have 2 years balance sheet. Okay, 2014 versus 2013. So this is the current one, so-called the current one. So this will be the old one, the previous year. I label them as number 1 and 0. Right. So first step, when you see this kind of question, we need to find the difference. Because remember, most of our label or our steps just now is to find the changes, right? The changes. So when you see this question with 2 years of documents, first things you need to do is to find the difference. So how? Based on year 1 minus year 0. Okay, year 1 minus year 0. So year 1, the latest one is 2014. And year 0, previous year would be 2013. Okay, the position not necessarily will be like this. Sometimes it can be 2013 here and 2014 here, right? So just be careful. Meaning always look at the current year minus the previous year. Right, so we're gonna do for all, okay? Even though there are some exclusion, but for the sake of our calculations, we're gonna do for all, okay? For all items. So, for example, cash. Okay, so 10,000. Okay, even though it's actually 10 million kat sini, but we're gonna exclude the thousands values. So we just use these figures. So 10,000 minus 15,000. Okay, 10,000 minus 15,000. So you're gonna get a negative 5,000. Okay, negative 5,000. Right, I put a bracket there to symbolize the negative values. Okay. Second item, marketable securities. Okay, from 0 minus 65,000. So what does it mean? 0 minus 65, again a negative 65,000. So what does it mean? Basically, in year 2013, we have 65,000 marketable securities, but the following year, it dropped to zero. So it reduced by 65,000. Similar like cash lah. In 2013, they have 15,000, but it reduced by 5,000 in 2014 to 10,000 or ringgit only. Okay, so that's what it meant by these negative values. Okay, they drop by this amount. Okay, and in order to get these values, we minus the current versus the previous year. So 375 minus 315, 60,000. Okay, and this is a positive value. Okay, it's a positive sign. This amount is bigger than this one, meaning they increase by 60,000 from 2013, 315, increase another 60,000 to 375 the following year. Okay, so this is positive value. And then we have inventories. Okay, so here is a 200,000 positive values. Okay, 615 minus 415. So 200,000 increase. So that's our current assets. Okay, these are our current assets. Next, we have net fixed assets from 100,000 drop to 870,000. Okay, and this would be this is basically 130,000. Okay, 130,000. Grab some calculator. Okay, so that's our assets. Okay, we have 2, 4, 5 items under assets. Okay, by the way, if you're not sure, tak clear, just let me know. Next, we go to the liabilities and also equity at the bottom. Okay, similar process, we just minus first. Okay, 60 and then minus 30,000. So 30,000 here. 110 minus 60, 50,000. Accrued expenses, 140 minus 130, it's 10,000. Okay, the subtotal don't have to calculate the total current liabilities, you don't have to calculate, similar like earlier total current assets. The sub values, you don't have to calculate. We just calculate the items. And then we have long-term debt. So the value, 754,000 minus 580. So 174,000. Okay, common stock, there's no changes, 170 to 170. Okay, for the sake of calculation, I just calculate the RE as well, even though it will not be part of it. Okay, tak payah, in fact, tak payah tulis RE. Should I? Maybe I put jugalah, it's actually 56,000. Okay, 56,000, the retaining difference, 6,000. Okay, so just minus everything. Some information will be used, some might not be used. Okay, some will be part of operating, some will be parts of investing, and some will be part of financing. Right, so again, I recap. First thing you need to do when you see the balance sheet question, the cash flow question, is to find the difference between 2 years of transactions. Okay, just keep minusing the current with the previous one, the current year with the previous year. Okay, some will be increase, some will be decrease. Okay, now next, after we minus, we're gonna label them based on the sources and users. Okay, we're going to label the items belong to sources or users. Okay, so I'll put here S/U. So S/U means sources or users. Okay, so this is where you need to remember the categories. For the first two parts, the net income, depreciation, or net loss with the dividend, you don't have to worry about this because this is from the income statement. Okay, and these are fixed. Okay, net income is always with sources, depreciation with part of sources all the time. Similarly, for users, loss and also dividend. So you don't have to worry about the changes. The one that important is actually the changes. okay, based on these categories. Okay, I recap for the assets part dalam balance sheet ni, we have assets, liabilities and equity kan. For assets, this part, if decrease of assets will be sources. If it increase, uses, increase of assets. So here you can see some decrease, some increase kan. For liabilities, they're the other way around. For liabilities and also equity, when they increase, it will be sources. When they decrease, it will be uses. So they're the opposite of assets. Okay, and in fact, L and E ni dia akan go together with the sign. So meaning if the sign increase, source, but decrease, use. Okay, for liabilities and equity, but for asset, it will be the inverse, the other way around. Okay, the inverse of this. Anyway, remember, cash will not be counted. Okay, we will not use cash in our three categories. So we're gonna label marketable securities first. Okay, marketable securities. So marketable securities, again, this is all assets, right? Under assets, okay, when they reduce like this is reduced, right? The negative means it reduce. Okay, so the reduction of current assets, this will be sources. So you put it here as source. And again, if you remember when I said source, the action that you need to do, you need to add. Okay, for users, you need to minus. Right? So here, technically, you will add. Okay, meaning when you put the items in your cash flows, you're going to add this 65. Don't get confused with this negative sign. Walaupun kat sini negative, but when we do our cash flows, we will add this 65,000. Okay, so the negative here doesn't mean it's a negative value. It means it reduces in values. The positive mean they increase in values. Right? So account receivable, we move to the next one. So 60,000 is a increase. Okay, increase in asset. So it's gonna be uses. Okay, for account receivable, uses, meaning we have to minus. Okay, inventory is also the same. It will be uses. Okay, and gonna minus it. Right, so for net fixed asset, for investment, again, the item is positive, so this would be uses. So we're gonna minus. Okay, and that's assets. So this part, the asset part, decrease, the one with bracket, it will be sources. Those increase without brackets, it will be uses. Okay, with these respective signs. Now we move on to the right hand side, the liabilities and also equity. Okay, liabilities and equity, they will follow exactly the sign. So meaning increase source, decrease uses. So meaning for account payable, it's 30,000. It's an increase. Okay, increase meaning this would be source. So meaning you add. Okay, you will add it. Notes payable, source, you add. This accrued expenses, source, you add as well. And for long-term debt, source, because it's positive, you add as well. So that's it. Common stock will not be part of it because there's no changes. Okay, so 0. You don't have to record it lah. Okay, retaining, we leave it as it is first. We're not gonna record return earning just yet. Okay, so this will be our second step. Right, first we find the changes, find the difference. Second, we label them between sources and users, like so. Okay, using this rule. So you have to remember this rule. This rule is really, really crucial. Okay, I recap for the last time. For assets, decrease in assets, sources, increase in assets, users. For liabilities and equity, increase will be sources, decrease will be users. Okay, and then we will label accordingly. Right. So the items that we will record in the cash flow will be actually based on this. Okay, this will not be part of our information. I mean, the items that we record in the statement will be based on this one. We're going to put all of this information in our cash flows. But remember, we have other items from income statement, which is the net income, depreciation, and also dividend. Okay, so we have to have that as well. You must have that in our cash flows. Right. So this would be our income statement. Okay, fine, 56,000. This is basically from here. But anyway, bear with me. Okay, okay, the solution we've discussed tadi. We minus everything. Then we have the action at minus tadi. I just put a symbol tadi kan. Right. So these are items from the cash flow, and we have exclusion, which is the cash. Even though I put negative 5,000, we will not record it, and also retain earning. Okay, the 56,000 will not be part of it. Okay. Right. Now we have 3 items that we focus from income statement. We're gonna need 3 items only. We need the net income. Okay. We need depreciation, and we need dividend. Okay, from income statement, we just need these 3 items only: depreciation, net income, and dividend. And these items, okay, for this question lah, it's already given here. Okay, it's already given because some question you might need to find yourself the values, especially depreciation or even dividend. Okay, but for this question, it's already given to you. So for income statement items, the 3 items, you don't have to minus. We're gonna use the current year's information. All 3 items here. We're gonna pick directly from the current year. Okay, this one, the recent year, not the previous year. We need to know the current year. So you don't have to minus. We just pick up directly. So for example, the income, it will be 117,480, depreciation 100,000, and dividend 61,480. That's it for income statement. Very straightforward. You just pick it up. Remember, depreciation will be sources, meaning we add. Net income will be sources, we're gonna add. And dividend will be uses. We're gonna minus it. All right, and this rule gonna be fixed. Okay, net income is always sources, depreciation always sources, dividend always uses. Hence this label tadi I dah label kat sini. Okay, it's gonna be fixed, not change. So that's it. Now you have all the information. You have all the information. Right? If you remember, we have this label tadi or this templates. Okay, net income, you have the information there, 100 and berapa tadi? For example, 117,480. So you're going to put net income 117,480 here, for example. Okay, depreciation 100,000. Right? These two will be fixed. But for the changes, you're going to look at the current asset, current liabilities. So you have to go through lah. Items under current assets, cash will not be part of it. Okay, marketable, if you remember, this is short-term investment, so this will be under financing, so you'll not put it under operating. So we were going to start with operating, account receivable. So account receivable, 60,000 users. So meaning here, after depreciation, you're going to start with, for example, account receivable. What's the value? Since this is a minus, sorry, it's a minus, so you're going to put 60,000 in bracket. Okay, and here. So we're going to negative 60,000 here. Right, so 170 tadi we get from net income directly, the depreciation 100,000 directly from the income statement as well. We're going to start with the current receivable. Why we put minus? Remember, our sign, ini tadi our sign for account receivable is a minus. Okay, value 60,000. And then we have inventories, also uses which is sign negative sign, negative 200,000. So that's why here is a negative 200,000. So this is from current assets. Next, move on to the current liabilities. For current liabilities, at the bottom here, we have account payable. Account payable 30,000 plus, okay, plus. So we put it here plus 30,000. And lastly, accruals, another 10,000 plus 10,000. So what you're going to do next is to, whichever plus, we plus, whichever minus, we minus. Okay, meaning 117 plus 100,000 minus 60 minus 200,000 plus 30,000 plus 10,000. So for this case, the operating activities equivalent to negative 2,520 ringgit. Okay, 2,520 ringgit. So that's our first category, operating. Okay. Next, we're going to look at the fixed assets. Okay, so this is one I never discussed earlier. For fixed asset, what we did was based on the question. Since this is net, net fixed asset. Some question may use gross. Okay, some might be used net, some might use gross, depending on question. So in this question, it is net fixed asset. So I get a negative or minus 130,000 earlier. Okay, but for the investing activities, we're going to use what we call as net capital expenditure. Okay, net capital expenditure. This is specifically for fixed asset alone, fixed assets alone. So for net capex or net capital expenditure, there are two ways how to find this. Depends on the question whether they use nets or they use gross. Okay, in this question they use nets. So in order to calculate our net fixed assets, first we're going to find the difference between the two, which we've done already earlier. Okay, net minus net, whereby we get 130,000. Right? And the sign is negative, so it's negative 130,000. But we need to add with depreciation. And our depreciation earlier was 100,000. So 130,000 plus 100,000 is 230,000 minus, because net capital expenditure is a minus sign. So that's why we have a value of 230,000. Okay. So the difference, 130,000, the depreciation, 100,000. So a total of 230,000. And this minus sign based on this. Okay. Jangan pula nanti you ambil negative 130,000 and then you add depreciation by depreciation 100,000 jadi tinggal 30,000. No. You add the values 130 plus 10,000. Sorry, 100,000. And the sign you base on this, the differences. Okay. Then you get a negative 230,000 for the investment activity. All right. So that's it. There's only one item under investment. We're going to look at the net capital expenditure. However, if the question give you gross, because in accounting, when we say gross fixed asset, it's actually inclusive of depreciation already. Okay, net here represents fixed asset minus depreciation. So that's why under capital expenditure, you want to know the values in total as a gross. So if the question gives you gross, we just minus without depreciation, because technically under gross, it inclusive of depreciation. But if the question gives you a net fixed assets, we need to add back the depreciation. Okay,
Sorry, sir.
so yeah,
Can I ask?
yeah,
Just now, wasn't it depreciation is wait, depreciation is sources.
yeah.
Sources is add.
That's why I said don't get confused with the depreciation yang for labeling of depreciation 200,000. Yes, it's always plus. But for net capital expenditure, right? Don't take the sign to as a saya cakap the value tu. Alright. So untuk net capital expenditure, our items would be net fixed asset net fixed asset 1 minus net fixed asset 0 plus depreciation. Okay, which is in this case is 100,000. Okay, but the sign of this negative ini will be based on these changes. Okay, these changes because an increase in assets will be users, and users it's minus. Okay, but we don't use 130,000 alone because we need to add the 100,000 of depreciation. So that's why we get here 210,000. Okay, 230,000 for this.
Oh, that means the negative sign is the sources sign.
Yeah, the user
Oh,
sign.
the user sign. Oh,
Yeah,
okay.
yeah. Okay, so you have to differentiate yourself between the values punya sign and also the action that we're going to take. Okay, this is basically negative here represent the action. Okay, bukan value dia negative The action is you have to minus. Right? And we're going to complete the third category, which is the financing category. All right, so whichever left, we have long-term liabilities, we have equities, excluding the retained earnings, and we have two items that we left out from current asset, current liabilities, which is marketable securities and also notes payable. So we're going to record all of those in the financing activities. So here we start with short-term investment, or this is marketable securities. The other name is marketable securities. Again, bear with me. Under marketable securities, financing, I put it here, financing tadi. It is 65,000 sources add. So, sorry. So marketable securities, 65,000 without negative sign, plus. Then notes payable, again, 50,000. So from here, notes payable, this one, also under financing. 50,000 plus, and the rest would be from long-term debt plus 174,000. Okay, long-term debt 174,000 and dividends 61,480, and always dividend is always minus. Here I already mentioned kat sini. For dividend, it's always uses. The income depreciation always add. So this is only one with minus sign here. So again, similar approach, we plus and minus accordingly. So for these financing activities, they have net cash of 227,520 ringgit. And finally, what you need to do, simply solve these three items. So maknanya negative 2520 minus 230,000, but plus with 227,520. So all three items, when you combine, you should get this value, negative 5,000. Okay, you should get this negative 5,000. And this negative 5,000, if you remember, we already calculated here. Okay, so meaning you can check your answer whether correct or not based on this, whether you get this negative 5,000 or not. If you get something else, here you already can check whether your answer is correct or not. Okay, negative 5,000. Right? And we add with cash of the beginning of the year, which is 50,000. Okay, beginning is 2013 and the ending is 10,000. Okay, again, that's why I said for the summary, you can put the summary at the very first step if you want, but it's defeat the purpose of cash flow statement lah. But you can check. You can use this as a confirmation whether you get it right or not. Okay, because 3 information you can calculate earlier. Okay, so the net cash will be a negative 5,000. Beginning 15,000. So meaning at the end of the year, they reduce by 5,000 ringgit. The company will have a 10,000 cash left. So that's why the cash at the ending, a 10,000 ringgit. And this is our cash flow statement. Okay, jadi kalau nak test whether you understand or not, you need to try. Okay, you need to try. But before we try, some question. Do you have anything to ask? Fuse ke? All right. So I have this one question. All right. We have 2 years of information. And for this question, they just provide us the balance sheet only, meaning there's no income statement. But for income statement, if you remember, for income statement, for income statement items, we just need 3 things: net income, depreciation, and also dividends. These 3 items you need to find, even though the question might not give you the complete document. Okay. So for net income for this question, they give you these values. So this is your net income. Okay, net income is given. Okay, but we don't have directly the depreciation and the dividend. It's not given directly to you. So you need to find it by yourself. So if the income statement is not given to you directly, okay, how to find this information? For depreciation, okay, for depreciation, if it's not in balance income statement, okay, you need to find it in the balance sheet. Okay, the balance sheet might give you where? Here, under the fixed assets. Under the fixed assets, they give you accumulated depreciation. Okay, if in income statement, we're gonna plug it directly from the income statement. We just plug the recent one. But for under the balance sheet for depreciation, we cannot take this 129 because this is accumulated, the accumulate from the previous year. So to get the depreciation for that particular year, we're going to do the same thing, meaning depreciation year 1 minus depreciation year 0. So meaning you need to differentiate between the 2 years, find the difference. That will be the depreciation for the year. So meaning you minus lah the 2 ni. Berapa ni? 129 minus 94.5. So 34.5 would be your depreciation. Okay, it will be your depreciation. Okay, so that's number 1. And for dividend, not study at it. If the dividend okay, let's say if the dividend is not given, it's not given to you. Like this one given already, right? Dividend to shareholders 61480. But if it's not given to you, okay. If it's not given to you, how to find the dividend? I'm going to write it here. First of all, you need to understand dividend comes from where? Okay, dividend comes from, I already wrote this, I think, during our earlier class. Comes from the net profits. Okay, our net profit, once the company derive the net profit or earn their net profits, what they're going to do, they will split it into 2. They're going to pay dividend to the shareholders, and the rest of the money will be parked under retained earning. Okay, and our concern is this amount, but this is our information required for our cash flows dividend. Right, so the thing is, dividend is not given in the question, but we know this, and we know this actually. Where I get this? This retaining. So by a simple mathematics, we can find dividend by, eliminate the retaining from the net profit to get the dividend portion. Okay, so mathematically, if you want to find dividend, based on this explanation just now, it's basically net profit. Yes, retaining. Okay, net profit minus retaining. You deduct retaining, then you get dividend. Okay, but similar like depreciation, the retained earnings is accumulated. Okay, the concept of retaining, it's accumulated every year. Okay, so to get the retained earning, the current retained earning, what you need to do, similar like depreciation, you need to minus this. So technically, it will be net profit for the year minus with RE1 minus RE0. Then you get dividend. Okay, so net profit is given here. Okay, and find the difference lah of the retaining, then you minus to get the dividend payments. Right, so what I want to do next, okay, I give you short breaks, obviously, and at the same time, I will leave this question, okay, and try buat soalan ni, okay, like so, I dah bagi some hint kat sini, right, and we're going to discuss, let's say, kita break, plus after the break, you straight away calculate this. I'll give you until 3:30, maybe 3:35 lah, 3:35 to try to answer this based on my explanation just now, and then we will discuss the answers towards the end of the class. Okay, so let's take a short break and 5 minutes, and then straight away try to solve this question. So I will leave this page with you. Okay, and if any question, just let me know. All right. All right. Any issues? You guys done or need to ask anything? Just let me know. Okay, as I said earlier, right, when you see the question asked for preparation of cash flow statements, okay, what you need to do first is basically look at your balance sheet, okay, because balance sheet will be given in the question, and starts with find the changes, okay, differentiate between the current and the previous year. Okay, must be from the current with the previous year. So meaning it will be year 1 minus year 0, as I mentioned earlier. So what we need to do is basically deduct je lah. So for example, cash, even though it will not be part of our statement, yeah, but this at least will give us a guideline. What would be the answer actually for our cash flow statement? So here, 82.5 minus 76, you have a 6.5, okay, for cash. So technically, this is our final answer later on. So when we want to find our then net cash transactions, it must be equals to 6.5. So this will be the beginning and this will be the ending because it's positive, so meaning they increase by 6.5. Account receivable, okay, 91 minus 100, we have a negative here, a -9. So remember again, if I put it here, sources and users, so a decrease in assets would be sources, I think we add. 163 minus 168 is a negative 5. Again, source and we add. Prepaid expenses reduced by 2. Okay, reduced by 2 means users, U minus. Gross fixed assets. Okay, so this is for our net capital expenditure. The question gave us gross. Okay, if you remember, for net capital expenditure, it's either depends on the question whether it's net or gross. If it's gross, we just minus, and that would be our final answer. But if it's net, just like what we have in the notes, okay, in the slides that I shared earlier, for net fixed asset, what we need to do, find the difference, and then we add with depreciation. Okay, but for this question, since they use gross like this, so we need to minus only lah. 450 minus 3 to 5.5, so we have 124.5. Okay, 124.5. And since it's an increment, so increment will be users. And then we have depreciation. Okay, as I mentioned earlier, we don't have depreciation or income statement, so we need to use balance sheet depreciation. So to get the current year's depreciation, what you need to do, again, you have to minus. Okay, 129 minus 94.5. We have 34. And for depreciation, it's always sources. Okay, depreciation is always sources. So that's our asset side. For the liabilities, we have account payable. So this is reduction used by 29.5 reduction. So for liabilities and equity is the opposite of this. Kalau tadi in bracket we put sources, here if it's in bracket it means users. So we minus. For tax payable, we get here roughly 7.5 positive, so sources. For mortgage, okay, mortgage is long-term liabilities, okay, for mortgage is long-term liability, so these two would be our current liabilities, and all three here would be our equity, right? So for mortgage, 0 minus 150 is a reduction of 150,000. So users, it just me. Okay, we need to make it consistent. So I use point at the end, so it's 0.0. Then 172.5 minus 163. So it would be 9 here. So this is sources plus. This is 231. 0. So source. And for retaining, I just calculate. 3.9. The difference would be 16.5. Okay, but retaining will not be part of sources and users, but we need to have this information when we want to find dividend. So for income statement, we have net income. This is our source for plus net income 36.5. Depreciation already we have 34.5. So we left with dividend. So we need to find dividend. So to find dividend, if you remember, the formula was net income, okay, 6.5 minus with the difference of retained earning. So the difference was 16.5. So therefore, the dividend would be 20.0 or 26,000. Sorry, 20,000. Okay, 20,000. And that's it. That's our information. Okay, so once you have the information, transfer all the relevant information into our cash flow. Okay, transfer into our cash flows using this template lah. We have this template. Starts with net income plus the depreciation, then all the relevant changes in working capital. Don't worry about increase or decrease. Just put account receivable will do. For example, account receivable, inventories. Macam tadi we have prepaid expenses, account payable, taxes payable. So just put that and the amount and the sign, whether to add or to minus. Okay, then find the net cash from operating activities. And then for net capital expenditure, we have gross tadi. We have minus gross fixed asset, which is this part. 124.5, again, use minus. And finally, financing activities. If you notice in the question, there's no marketable securities and there's no notes payable. So therefore, we just record long-term debts, which is mortgage, and then equities. And we also have dividends. Okay, and that's it. We add everything or minus, whichever relevant, get the final amount. And the total must equivalent to, we have already the answer, 6.5. Right, and yeah, that's it. And that's how you solve the cash flow statements. So we can see the movement of cash transactions, right, for that particular year. Okay. May I know what will be the net cash from operating? Okay, I need to know ni tiga benda je. Okay, net cash from operating berapa? Net cash from investing and net cash for financing. Okay, we need three information here. Right, so your final answer might be correct. Just to let you know, your final answer might be the same. Meaning you get this 6.5 and then these two, obviously, but the categorization must be at the right place as well in terms of operation, investment, and financing, especially if you have the marketable securities or notes payable. Okay, but for this question, we don't have those two. So meaning it should be straightforward. Okay. Anybody, can you give me net cash from operating activities? You have all the answers here, all the figures here.
$86.5%.
86.5
Ah,
operating.
yes.
Okay, I letak dulu 86.5. For investment, I can give you straight away lah because we already have the gross fixed asset kan. So it must be 124.5 But since it is minus sign kan, so this must be minus lah. You have to minus it. So for financing,
$48,000, sir. Oh,
berapa?
48.
48 financing.
I'm not sure.
Tak apalah, letak dulu. In financing part, is it?
Yes.
48.
Yes.
Okay. So 86.5 minus 124.5 plus 48, you cakap. Salah. Hai, salah tulis ni. Sedap je. 86.5 plus 4.5 plus 48. Dapat? Tak dapat. 6.5. Okay, let's look together. I try to create let me use my whiteboard here. Okay, so the working, I hope everyone understand the working. So I recap, when you try to answer the cash flow statements, first find the difference simply by deduct the current and the previous one. So don't minus the other way around. So make sure you know which one is 1. So dalam case this is 1, this is 0. Not like the question just now. The latest one is 1, the previous year is 0. So year 1 minus year 0. So meaning in this case is the other way around from the notes lah. Kalau notes tadi we minus directly, but here is from the other side. And once you minus everything, you label, and on top of the balance sheet items, remember we have 3 more items from the income statement, which is the net income, the depreciation, and also from the dividend. So once you have all the information, you can straight away prepare your cash flow statements. So the cash flow statement must consist the title, the header. Okay, first you just put. Okay, so just follow the format of your balance sheet here. Must have the name of the company on top. Okay, and then name the statement lah. Cash flow statement. For 2014. Okay, because you are doing for 2014. Right? And our first category would be operating activities. Okay, this is our first Table lah, number one, operating activities. So our first item under operating activities would be net income. Always starts with net income. Okay, net income. So where to get this information, net income? This one, from the information at the bottom. So the net profit after tax or the net income is 36,500 ringgit. Okay, and since we are using the point form on top because of the thousands, okay, we need to add juga lah sini. Okay, so therefore, we're going to use the same format lah. So I'm going to use 36.5 here. Okay, which is 36,500 ringgit. If you don't want to use this part, the thousands punya decimal on top here, you want to put in full, for example, you can do that, but make sure everything else must be consistent. Okay, but this would be much easier in terms of documenting. It'll be shorter in order to record everything. Okay, I prefer this way to record. So after net income, we have depreciation. And depreciation is based on this part. We have 34.5. Okay, so these are the two so-called fixed item. Okay, we always start with these two. Okay, so the plus minus depends on the sign. So in this case, if no bracket is plus, with bracket I will minus. Okay, so I just leave it as it is. Now next, you're gonna go through all your current assets and current liabilities, but remember, we will have to exclude some of the information. For example, cash, marketable securities, and also notes payable, if any. Okay, so for cash, memang we ignore first. Okay, we're not going to record this in any of the categories. Okay, so we're going to start with account receivable. So account receivable. Okay, account receivable, you have 9 plus. So just put 9, 9.0. And then we have inventories, next one. Okay, inventories. So inventories, 5. Okay, plus sign. So 5.0. Then we have prepaid expenses. Okay, prepaid expenses, 2 minus. So I'm going to put 2.0, but with brackets. Okay, then gross fixed asset will be part of investment. Session we already recorded earlier. So that's current assets, but it's not done yet. We have to go to current liabilities. So we have two current liabilities here. We have first account payable. Okay, account payable. So account payable, 29.5 minus. Okay, 29.5 minus. And we also have taxes payable. Okay, taxes payable, 7.5 plus 7. And the rest will be long-term liabilities, mortgage, and also equity, okay, which is not part of operating. So for operating, that's it. So add everything from here. So this would be known as net cash from operating activities. Okay, I put short form, tapi kalau boleh put in full from operating activities. So 36 plus 34.5 plus 9 plus 5 minus 2 minus 29.5, then plus 7. Okay, based on my answer here, I get 61. Okay, 61.0. Okay, so that's net cash from operating activities, 61,000 ringgit. Okay, 61,000 ringgit. Second, this is from investing activity. Okay, so for investing, we just have one information or one item, which is I always put here net capex, net capital expenditure. And this net capital expenditure is from our fixed assets. And I recap back for fixed assets. It depends whether the question gives you gross or nets. If gross, like this question, what we need to do is just minus and then we use that information directly. But for nets, okay, on top of the difference, you need to add with depreciation. Okay, for net. Okay, but since we are using gross, so net capital expenditure would be, we have already 124.5, 124.5, and the sign would be minus. Okay, minus. Right, so for investing, that's it. That's the only information, 124.5. And lastly, the third one, we have financing. Okay, financing activities. Right, so for financing activities, like I said, refer back to your current asset, current liabilities for marketable securities or notes payable, if any, but in this question, both not exist, meaning there's no marketable securities in your current assets, there's no notes payable in current liabilities. So we don't have any items from current assets or current liabilities, but we have long-term liabilities, which is from mortgage. So we're going to record mortgage first. So mortgage, we have 150,000 or 150 minus D minus. Then we have common stock. The common stock is 9. And we have the preferred stock. And the preferred stock is 231. Positive, yeah? Positive sign. And finally, don't forget the dividend. Okay, the dividend. And our dividend earlier, it's 20. Okay, but remember for dividend is part of users. Okay, this is always users U. So when U, we have to minus. So don't forget to put a negative sign here. Okay, so ada yang miss? Okay, I think that's about it. We find the subtotal. So this would be net cash from financing activity. So 150, negative 150, plus 9, plus 231, minus 20. So here I get 70.0. Okay, so we have here the three categories: operating 61, net capex 124.5, and financing 70. Okay, plus 70. So your net cash would be supposed to be 6.5. Okay. Okay, like I said, the summary, net cash, cash beginning, cash ending, you can get it from here actually. Right, but you need to double check lah. 61 minus 124.5 plus 70. Is it 6.5 or not? Okay, that would be your SASA or your adjective. So cash beginning of the year. Okay, beginning of the year will be 2013, 76.0. Cash ending the year. So 6 plus 76 be 82.5. Okay, so this would be our statement, cash flow statements. Kita buat semua something like this. right? So to get the 11 marks based on this question, you should have the relevant information in the correct categories, and obviously the amount. Okay, when you add 61 minus 1 to 4.5 plus 70 must give you 6.5. Okay, so that's how we do the cash flow statement. Right, any question? Okay, so if there's no question, I think for today I'll stop until cash flow only. So for our next meeting next week, we're going to continue with another two, which is the cash budgets, right? And also the pro forma statements. And remember, cash budget and pro forma statements are actually cash planning, or our method of forecasting. We want to forecast what will be our statements in terms of budgeting for cash, and also our statements, in terms of the statements, balance sheet and income statements, looks like in the future. So we're gonna calculate lah based on the two financial planning statements. Okay, so I think that's about it for today. So as always, I will post the videos via my Guru punya link, which will direct you to the YouTube channel too. And as I said before, the YouTube channel too, if you go through, you browse, I also provided a playlist there whereby you can refer back to the previous chapters videos if you want from there. So please make use of the YouTube channel for your reference, especially like certain things like related to later on for the assignment or whatnot. Okay, so thank you very much, and we will continue next week.
Okay, Doktor.
Right, welcome.